Welcome, everyone, to the 33rd episode of FinWell Daily Brief.
Great to be here.
It is May 7th, 2025, and we are digging into today's market closing data. And honestly, there's quite a story in these numbers today, isn't there?
Oh, absolutely. Even on a day with, relatively small headline moves, the underlying currents are fascinating.
Exactly. So let's jump right in with our financial fact of the day. This one really caught my eye.
Okay.
Get this. As of fiscal year 2024-25, over 60% of Indian households now hold formal financial assets. Think mutual funds, insurance, pensions, all of it.
Wow, over 60.
Yeah. And if you go back just a few years, fiscal 2018-19, that figure is only 47%. That is a massive jump. What do you think is behind this?
Well, it's really a couple of big things working together, I think. First, definitely a major increase in financial literacy across the board. People just understand saving and investing better.
Right, more awareness.
Exactly. And second, you just can't ignore the digital explosion. These platforms have made it so much easier for, well, almost anyone to access financial products.
It's incredible, straight from your phone.
Right from their phones. It's like technology just opened the doors for millions. Democratized access, really.
Truly has. Okay, so let's look at the markets themselves. Nifty 50 closed at 24,414.40, just a small gain, up 0.14%.
Pretty steady there.
But, and this is where it gets interesting, the mid and small caps, they really outperformed. The Nifty midcap 150, up a strong 1.51%.
Yeah, closing at 19,943.65. That's quite a move.
And the Nifty small cap 250 also did well, climbed 1.19% to 15,362.70. What's this broader market strength telling us?
I think it signals pretty broad investor confidence, actually. It suggests people aren't just sticking to the big names. They're looking for growth across the market, maybe expecting better earnings from these smaller companies.
So confidence beyond the giants.
Seems like it. And you see the Nifty Total Market Index also up 0.55%. It kind of backs that up. The overall market breadth looks healthy.
Interesting. Okay, let's pivot slightly. Bonds and the rupee. The 10-year G-Sec yield ticked up a bit, closed at 6.37%, just up from 6.35%.
It's a small move, but...
Yeah. And the rupee, well, it slipped a little against the dollar, settled at 84.62. What's the dynamic there?
Well, the slight rise in the bond yield, that's likely reacting to the geopolitical news, the strikes in Pakistan-occupied Kashmir.
Ah, the tensions.
Exactly. That kind of thing introduces uncertainty, risk, and bond yields often reflect that. People might move to safer government bonds, pushing yields up a touch.
Makes sense. And the rupee?
Similar story, really. Those India-Pakistan tensions play a part. Plus, there's still that background noise of, global uncertainty about what central banks, especially the Fed, will do with rates.
So geopolitical ripples, basically. Yeah. Got it. Now, on a much more positive note, FPIs. Foreign portfolio investors.
Yes, the April numbers.
Huge inflow into Indian financial stocks in April. We're talking $184.09 billion. That's what, $2.18 billion?
That's a massive number. Third highest monthly inflow ever, I believe.
Right. And it clearly helped boost the Nifty Financial Services Index, up 4.1%. That feels like a huge vote of confidence from overseas investors, doesn't it?
It absolutely is a very strong signal. Investing that heavily, especially in financials, it's just they really believe in India's economic basics and the earnings potential here.
Like they see long-term value.
Precisely. It highlights how attractive India's financial sector is looking on the global stage.
Fantastic. Okay, so we mentioned the geopolitical situation, the strikes. How much do events like that typically shake up the markets beyond just these immediate sort of small reactions we saw today?
Well, they can definitely increase volatility, particularly in bonds and currency, like we saw as investors try to figure out the potential economic fallout, maybe fiscal costs.
Right, the uncertainty factor again.
Exactly. People might shift to safer assets, which affects yields and can pressure the currency. How big the impact is and how long it lasts really depends on how serious things seem and if escalation looks likely. The market sort of holds its breath.
Understood. Now, switching gears a bit, some other interesting news. Qatar National Bank, QNB, has opened a branch in Gift City. That seems quite significant.
Oh, it is. Highly significant. QNB is the first bank from the Middle East and Africa to set up shop in Gift City.
The very first. Wow.
Yes. It really underlines the growing international interest in India's financial sector and specifically in Gift City as this emerging global hub. A real sign of confidence.
Another positive indicator. Okay, slightly different angle. Exim Bank apparently pulled back a planned 10-year bond issue. Why would they do that?
That's likely just down to market conditions. With yields ticking up, like we discussed, it just becomes more expensive to borrow.
So not the right time.
Probably not. They likely decided to wait for potentially better, more stable conditions to get a better rate. It's just smart financial management, really, optimizing their fundraising cost.
Makes sense. Prudent move. Okay, looking ahead then, what about the rupee? There's an SBI report suggesting it might stay relatively stable, maybe in the 85 to 87 range against the dollar for the rest of 2025. Why the optimism?
Yeah, that stability forecast is mainly banking on the idea that the U.S. Federal Reserve will probably keep interest rates where they are for a while, at least for the next few meetings.
Ah, the Fed holding steady.
Right. When U.S. rates are stable, it usually means less volatility for emerging market currencies like the rupee. It reduces those big capital swings driven by rate differences.
Okay, let's pause for a moment. Are you finding these daily market insights valuable? Do you want to cut through the noise and understand what really matters in the world of Indian finance? Then you absolutely need to make FinWell Daily Brief a part of your daily routine.
It's essential to stay informed.
Subscribe right now. Get this concise, expert-led market analysis delivered straight to you. Make sure you're always in the know. And hey, for deeper discussions, networking, continuing this conversation, find SOS FinWell on LinkedIn.
It's a great community there.
It really is. People serious about their financial well-being, so don't miss out. Empower your financial journey. Subscribe to FinWell Daily Brief wherever you get your podcasts, and look up SOS FinWell on LinkedIn. You will be glad you did. All right, welcome back. Let's put our analyst hats back on. Thinking about the overall market outlook based on today, even with those geopolitical jitters, the Nifty held its ground, even gained a bit. That shows some resilience, yeah.
Definitely. Underlying strength. And as we talked about, that strong showing from the mid and small caps, that really underlines the broad confidence.
Right, it's not just about the giants.
No, it suggests investors see potential more widely, a more diverse growth story, perhaps.
And the GSEC yields ticking up slightly. What's the takeaway there?
Well, it shows the market is paying attention to potential fiscal costs from the geopolitical situation, factoring in maybe more government spending.
Okay.
But, keep in mind the RBI's bond buying program, that could help keep yields fairly stable.
Yeah.
It acts as a counterbalance.
Right. And the rupee's little dip. Should I worry much?
I wouldn't say worry. It's mostly those external things, geopolitics, global rate questions. But that SBI forecast, expecting stability in the 85-87 range, that should offer some comfort, especially for importers and exporters who need predictability.
Good point. And bringing it back to the FPI flows, that heavy investment, especially in financials, that's just fundamentally positive for the market's health, isn't it?
Oh, absolutely. It's a strong vote of confidence in India's economy overall and in our company's ability to generate earnings, especially financials, which are often seen as, a bellwether for the broader economy.
So for you listening, navigating all this, what's the key advice right now for investment strategy?
Well, staying informed is critical. Keep an eye on those geopolitical developments, obviously, and watch the upcoming corporate earnings reports very closely. They'll give real insight into how companies are actually doing.
Ground truth.
Exactly. And as always, diversification is key. Spreading investments across different sectors, different asset classes, that's still the smartest way to manage risk in this kind of environment.
Sound advice. Okay, before we wrap up, we need to touch on something important a scam investors should watch out for. It's called short and distort. Can you break that down?
Yes, definitely something to be aware of. So short and distort is basically when traders first short a stock, meaning they bet its price will fall.
Okay, they profit if it goes down.
Correct. Then the distort part. They deliberately spread false, negative rumors about that company. Online, social media, wherever. The aim is to create panic, scare other investors into selling, and drive the price down sharply.
So they manufacture the drop.
Precisely. Then they buy back the shares at the lower price to cover their short position and pocket the difference. It's manipulative and unethical.
Seems nasty. How can retail investors avoid getting caught up in this? What are the red flags?
Big red flag is sudden, really negative news, especially if it comes from sources you can't easily verify, anonymous posts online, rumors on forums, that kind of thing. If it seems designed purely to scare people about a company, be very skeptical.
So don't just react to headlines.
Absolutely not. What's the golden rule here?
Verify, verify, verify.
Always. Check official sources. Company announcements, filings with regulators like SEBI, reports from reputable financial news outlets. Never, ever make an investment decision based purely on some unverified rumor you saw online. If it sounds too bad to be true or just overly sensational, dig deeper. Through trusted channels first.
Crucial advice. Okay, so pulling it all together for you today, the market's really showing this balance, right? We've got strong domestic fundamentals, good foreign investment supporting thing.
A positive long-term picture, yeah.
But then we also have these external factors, especially geopolitics, creating some short-term choppiness and volatility.
Exactly. It's an environment that needs, well, both optimism for the long run and a watchful eye on the present uncertainties. Staying informed, relying on good info, that's your best bet.
Well put. And that brings us to the end of today's FinWell Daily Brief.
Thanks for tuning in.
Please do subscribe so you get your daily market insights. And definitely connect with SOS FinWell on LinkedIn. Let's keep the conversation going there.
Stay informed, stay connected.
And let's end with a wise quote from Benjamin Franklin. An investment in knowledge pays the best interest.
Couldn't agree more.
Thanks for joining us.
This report is for informational purposes only and does not constitute financial advice. Investors should conduct their own research or consult a financial advisor before making investment decisions. All data is as of May 7, 2025.